Amigo Loans, a UK-based lender that specialized in guarantor loans, faced widespread accusations of mis-selling. This led to a significant number of customer complaints and, ultimately, the company's closure to new lending. So, what exactly did mis-selling mean in this context? The central issue was Amigo's failure to conduct proper affordability checks before approving loans. Lending regulations require firms to ensure that a customer can afford the loan repayments without it causing them significant financial difficulty. Amigo's automated system and its staff often failed to do this effectively. Borrowers were given loans they couldn't realistically afford. This often led them into a spiral of debt, struggling to keep up with repayments and, in many cases, having to take out further loans to pay off the first one. Guarantors, who were typically family or friends, were also not properly assessed. Many were pressured into acting as guarantors without fully understanding their legal and financial obligations. The mis-selling meant that guarantors were left to make payments for loans that were unaffordable for the borrower from the very start. The scandal came to a head as a flood of complaints were made to the Financial Ombudsman Service, FOS, and the Financial Conduct Authority, FCA. The FOS found in favor of customers in a very high percentage of cases, confirming that Amigo had indeed been lending irresponsibly. To avoid going bust from the cost of compensation claims, Amigo attempted a scheme of arrangement. This was a legal process to cap the amount of money they would pay out to affected customers. The first scheme was rejected by the High Court for being unfair to customers. A second, revised scheme was eventually approved, but it still meant that claimants received only a fraction of what they were owed. The mis-selling scandal led to the liquidation of Amigo Loans in 2023. The company, which had been a major player in the guarantor loan market, was ultimately unable to survive the financial fallout of its past practices. The scandal served as a major warning to the financial industry about the importance of responsible lending and the consequences of failing to protect vulnerable customers.